So let's get to our top story today. Australia's largest oil and gas company, Woodside, has approved the 27 billion Australian dollar Louisiana liquified natural gas project on the Gulf Coast of Louisiana and east of Houston. Woodside bought the project last year for around $1.2 billion and brought in the US investor Stonepeak as a co-investor. Now, the decision is massive, but it also raises questions in this federal election campaign, including the prioritisation of this massive project over other prospects that the company has. So let's bring in here Woodside's Chief Executive, Meg O'Neill, from the company's headquarters in Perth. Meg, many thanks for your time. Can I just start with that prioritisation of this project over other prospects that you've got, notably in Australia? Was there a compelling reason to go ahead with this project against others that you've got?
Well, thanks, Ross. As you might appreciate, investing to grow a business as big and complex as a business like Woodside takes quite a bit of work. And as we've looked around the world, we've asked ourselves, what are the sorts of opportunities that we ought to be pursuing to ensure that we can deliver value for shareholders, not just this quarter, but decades into the future? That led us to the Tellurian acquisition, which we concluded last year, which gave us access to a fully permitted site, permitted for 27.6 million tons of LNG. And just to calibrate, that's the size of our Northwest Shelf project, plus our Pluto project, plus Pluto Train 2. So it is a massive opportunity to build an LNG footprint in the United States, mirroring what we've done here in Australia. The returns are compelling.
Yep.
13% internal rate of return, 7-year payback period. We've got Bechtel locked in with a lump sum turnkey contract. We've started site civil work, so we've de-risked that element of construction. So the project is in great shape, and it was an investment that we couldn't say no to.
Okay, so then take me to things such as tariffs. What's the impact of bringing in, say, some of the building materials and other things that you need to build this project from around the world? Do they incur those 10% tariffs or not?
Yeah, a couple of great things about this project. So we have a foreign trade zone designation for our site, which allows us to bring materials in without incurring tariffs. Now, the agreement that we negotiated allowed us to then put those equipments into service without incurring tariffs. Obviously, things are a little dynamic in the US, so we're going to be working closely with the administration to retain those protections. But the other thing that is a significant mitigant for us is 75% of the construction is labor. Only 25% of the construction cost is equipment and materials. Of that, about half is US sourced. So the tariff exposure actually is a very modest percentage of the total investment. And that gives us confidence with taking the decision forward today.
Okay, so then in the construction phase of this, there's around 15,000 jobs created. Now, I presume that the vast majority of that workforce will be American workers.
It will. So the style of construction that we're doing for this project is what's called stick-built. So again, it's not fabricate a big module somewhere. It's build everything on site. So the structural steel, the concrete, the foundations, all of the electrical, the cabling, all of the equipment, all of that is going to be built on site. So yeah, 15,000 jobs in the US to deliver this project.
So you've got expansions right now of the Pluto project on the Northwest Shelf, of the Northwest Shelf itself. You've got the massive Scarborough project on the way. Was it a case of prioritising at the moment the US project here, Louisiana, versus having gone ahead with another project in Australia where quite clearly there are political risks?
Well, we've got a number of projects underway. Scarborough Energy Project, as you mentioned, right here in Australia to develop the Scarborough gas field offshore Western Australia. That project is well matured. We're expecting first LNG in the second half of 2026. We have a development in the deepwater Mexico of an oil field development, expecting that to start production in 2028. We do have other opportunities in Australia. The Browse field is probably the most notable, as well as the Sunrise opportunity. So some reasonably large gas fields. But again, we've been working on those for a long time. Getting the environmental approvals has proven to be a bit challenging. So we'll continue to try to work, but we need to make sure that we don't kind of get the cart in front of the horse and start spending shareholders money on project work when we don't have confidence in those environmental approvals.
So I want to go to that point about confidence in environmental approvals. You're not blind to the fact that after the election this weekend, there could well be a Labor government that requires green approvals for legislation. The Greens have got a noted policy for saying that there would be no more new gas projects in Australia, which would include Woodside's projects that it's got in the pipeline. Does that concern you?
Look, absolutely. So one of the things that's been really positive in this election campaign is that both Labor and the coalition have affirmed the importance of gas in meeting Australia's future energy needs. The thing that I'd like to see from whichever party is elected is action to underpin that. You know, we've got to be taking practical steps to tackle the red and green tape that is preventing developments from progressing. Now, I am worried that there are candidates in this election who are opposed to even really simple things like extending the life of the Northwest Shelf project. So this is Australia's first LNG development. We started producing gas in 1984. The approval we're requesting is just to continue operating post 2030. We're not going outside the fence line. We're not building anything new. It's really to continue operating so we can maximize value from the gas fields that we've already developed. The fact that that's become a political topic is very concerning for us.
Okay, so I want to ask right now, if you were to start a new project in Australia right now and you could get the approvals, could you build the project with the speed that you can build Louisiana? Could you get the 7-year payback in Australia that you can get from that project, which is a massive $27 billion investment?
Look, Scarborough is, I think, the best proof point. We are investing heavily in Australia. The Scarborough Energy development is $12.5 billion. So that'll be roughly, call it 17, 18 Aussie. So very significant investment that we're making that's got a comparable payback period, very competitive price LNG delivered into our customers in North Asia. So those opportunities are out there. But again, it's a bit of a challenge of needing to roll up your sleeves, work through the environmental approvals. And again, that'd be the kind of pitch I'd make to whoever's elected is we need to be taking practical steps to tackle red and green tape in this country.
And in the meantime, Woodside has to diversify globally simply to, shall I say, defray the risk away from Australia.
Look, we've as a business had a high portfolio concentration in one jurisdiction. We're proudly Australian. I mean, we're an Australian company. We continue to proudly invest in projects like the Scarborough Energy project. But as we think about our future business resilience, there is merit in making sure we have appropriate diversification. So that's diversifying commodity types, LNG, oil, new energy products like ammonia. It's diversifying locations. So complementing our strong Australian position with an equally strong North American position. It just gives us better business resilience for the long run.
Meg O'Neill, always great to chat to you. Many thanks on what is an historic day for Woodside. I appreciate your time.